Chad Morganlander is back. He's Senior Portfolio Manager at Washington Crossing Advisors. We heard your kind of top-level thoughts, Chad. Now we get to get a little tactical, and we're going to start with Microsoft. They just unveiled a host of updates to cloud and AI services at the Ignite conference in Chicago. CEO Satya Nadella spoke exclusively with CNBC, touting historic demand for their 365 Copilot platform.
AI is doing that for all knowledge work, whether it's in customer service, whether it's in marketing, whether it's in finance, whether it's in sales. And this Copilot Studio and agents has been transformative. It's the fastest, just to put it in perspective, it's the fastest selling adopted suite of Microsoft 365 ever in our history.
And Chad, some have questioned the stock's valuation in part, given not valuation, its performance. It's lagged a bit. Even some questioning the Activision deal. What do you do with it?
So we've owned this stock for over 10 years in our rising dividend portfolio. We'd be a buyer of it. We think that overall this company's stock price can go well above 600 over the next several years. 50% of their revenue, just to simplify it, is coming from subscription-based business. That cloud computing side of the business is a reoccurring revenue business, and they will upsell the small, large businesses with AI as well as with data security overlays, making this a very lucrative business over the long run. Growth rate's 10%, profit margins are around 50%. We would be a buyer of this.
All right, let's move on to Walmart. The share's hitting a new all-time high after topping third-quarter results. The company also raised its full-year sales forecast, citing customers making more discretionary purchases, ordering more home deliveries online, and also getting an early start to the holiday shopping season. I know, Chad, you've bought my present already at Walmart.
I did.
Good.
Okay, so Walmart, we have been owners of this again for 10 years. The flywheel is working. So all the business investment that they put in over the last 3 to 5 years is now paying off. What they did on these earnings is they beat across the board, and you saw that the consumer is spending. So it's not as if they're rolling over. In particular, it looks like the high-income earner cohort is going and gravitating towards Walmart. So that bodes well for the stock price. They have growing margins. In particular, you're seeing them bring in the consumer from the food side and then upselling them with brands. So not to worry about the tariffs. 2/3 of their business or their products come from the United States or assembled in the United States.
Wow.
And they'll pass on that tariff to the consumer or push back on the supplier.
Well, perhaps then we'll move along to my favorite story of the day, which is Intuit. The TurboTax maker is one of the worst performers on reports that President-elect Trump's new DOGE commission could introduce a new tax filing app. Of course, there have been efforts before to kind of simplify the filing process. Chad, is this a legitimate reason to sell the stock, or would you be a buyer here?
So we would be a holder of this. This is based off of valuation. We think this is a high-quality company that's growing, profitable, well-capitalized. The problem here is that about $6 billion of their $18 billion comes from the consumer side of the business. This looks as if that this is a long-run, perhaps headline risk concern. But overall, we think that this isn't an immediate concern. They're building out their platform on the business side, in particular on the middle market side. And we think overall that this is a really good company, but the valuation to us doesn't make sense at this inflection point.
Be that way. Chad, thanks so much.